Joining me now on this Market Open and What's Ahead is Michelle Schneider. She's Chief Market Strategist at MarketGauge.com. Michelle, great to see you and Happy New Year.
Happy New Year to you.
What's in focus for you as we are picking up steam during this earnings season?
Well, this is going to be a year. Obviously, I didn't think it was going to start so quickly, but with a lot of boldness, a lot of volatility, a lot of confidence. But yet also there'll be some moments that are going to be frightening just because of the headlines coming so fast and furious. And that's how we're starting the year. We're then going to go into midterm elections, which could bring a whole other host of issues. So essentially how we're approaching this right now is that we're very, very interested in what's going to happen with the rotation and can that sustain into small caps and also into the transportation and retail, which right now we're starting to see weaken a little bit compared to the growth. And that, of course, could be because of earnings and a bunch of reasons. But we think in order for the market to really sustain, we have to see that U.S.-centric areas become stronger, because that is really the whole plan of the Trump administration, right, is to bring everything back to the U.S. and make our economy better.
Yes, well, we will be watching that indeed, and I'm glad that you pointed out a broadening of the rally. How could this earnings season change the game when it comes to that, seeing leadership expand beyond these technology names, which are set to report this week?
Well, we have to see some of the small and mid-cap stocks really start to do better. Some of the retail names that were doing great coming into the end of 2025, the smaller retail started to falter. We really need to see the consumer and retail, I think, most important, because that ultimately is going to be the barometer that's going to drive the market. I mean, at this point, we have a tremendous amount of confidence. The risk appetite is as high as it's been in 2021. The amount of cash on the sidelines is minimal. People are fully invested. And so essentially, the earnings has to prove that we are seeing growth outside of the Apples and the Googles and the Microsofts. And some of those stocks actually are really doing a little bit better now because of the fact that they've sold off, like if we look at Microsoft. But it cannot just be a tech-generated economy anymore. We need really to see airlines and biotech and retail and transportation stocks doing much better.
I want to talk to you, Michelle, about precious metals, because I know this is a space that you've been following, in fact, for years, really since the pandemic and since that peak of inflation that we saw in 2022. Gold, silver, they've seen impressive runs, notably in 2025, and gold near a new all-time high, if not at a record, as we speak. What do our viewers need to know about this space?
Well, my favorite expression is that gold has been the mirror to really reflect any of the cracks that we've seen with things like obviously geopolitics being at the top of the list, but also credit and high debt and government spending, the K-shaped economy where a lot of people are still struggling, what's going to happen with the labor market and interest rates. So gold is looking at all of that. So the reason why I bring that up again is because what is going to make gold go down will be a comfort that those areas are being dealt with. And to date, we cannot really say that. Silver, of course, has a different type of perspective because it's got a lot of industrial use, and we're seeing that there are shortages in terms of supply. The ratio between the two, though, is extremely important because the gold to silver ratio is extremely inflationary telling. And right now, I think people have gotten too complacent about inflation. So that could keep the metals going, or at least keep them from falling apart. However, I think the opportunity right now, Kristen, is in some of the other commodities that have been underperforming outside of the metals. So we're looking at the agriculturals and the softs. We're looking at oil. Obviously, natural gas has had its own little flying because of the weather, but it could even sustain because of production being down. I think the biggest risk we have to the market is, can inflation stay tamed, as many are predicting, or will we see more of a hyperinflation based on what the metals have been signaling to us?
It is interesting. I want to get your take on cryptocurrency, Michelle. I'm not sure if it is something that you invest in or where you land on that, but certainly the cryptocurrency space, we've seen it not performing as well as precious metals of late.
Well, I actually started to think yesterday that it sort of reminds me of the way silver was doing in 2022, 2023. We started to get bullish, obviously, after the 2021 spike, but it went down tremendously, and there was an awful amount of bearish sentiment in silver, and it was manipulated. In fact, so manipulated, we've actually seen even get into trouble for it. So what I think is that we're having kind of the same situation in cryptocurrencies. If we look at Bitcoin, it seems like anytime it goes up, there's a lot of forced selling that comes in. But I think the fundamentals support a higher Bitcoin. We're particularly interested in Ethereum. We have a position in Bitmine. We believe that Ethereum right now is holding on better. We get back through 3,000. We still are very bullish cryptocurrency unless we really start to see a more significant breakdown in the January lows. But I'm starting to invest in that more heavily, just like we started to do in silver in 2022.
It is interesting to see. Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle, thanks again for joining.
Thanks so much for having me, Kristen.